Hey, hey there. Hi, everybody. It's Sadia Davis on a Friday. I am so happy to be here with you. We are really fortunate to have a three-part series on financial literacy. And today we are bringing together two incredible individuals to talk to you a little bit about what it means to, whether it's save your money, or how about what if you're in the market for a new financial advisor? What do you do? I mean, where do you begin? Who do you talk to? What firms are the best ones to go with? So, as you know, the Center for Creative Entrepreneurship, we provide resources to emerging entrepreneurs in 9 industries of creative arts. And we are generously funded by the Coleman Foundation and are a recipient of Arts Alliance Illinois as our fiscal sponsor. So without further ado, I want to bring to you our guests, but also be sure to check in on our website for upcoming events, as next week we will have our 3rd installment, which will be more around short-term, long-term, and then also looking at various asset classes to invest in. So the goal with this whole financial literacy 3-part series was to kind of compound on each one and give individuals at different levels in their process of saving or their wealth and their investments ways for everybody to understand and to partake. So let's go ahead and bring on Ron Wexler. Ron is the Director of Business and Talent Development for New Growth Partners and oversees, playbooking, best practices in talent development and business development initiatives. Prior to New Growth Partners, Wexler spent 12 years at Citadel in numerous capacities, most notably in macro research, fundraising, and talent development. Ron, thank you for being with us again on this Friday. It's good to see you.
It's great to see you. Happy Friday.
Happy Friday. I mean, listen, we are fortunate to be able to have this conversation. We're in the middle of a pandemic. The world is going through a lot right now, but at the same time, this is an opportunity to help some individuals who are in a position to save, to help some individuals who are in a position to do something different with their money. Going into this pandemic, it's like, well, what do I do? What's going to happen? And so many businesses just stopped. So last week we talked basically about some of the things that individuals can do right away. Let's just have a brief recap.
Well, very briefly, we talked about having a budget, living below your means, saving every single week or every single month, just a little amount. We talked about various ways you could save, either by having a little piggy bank, and every time you spend $1 and you get some change, you put it in the piggy bank, or you can use some of the websites like an Acorn. Your guest that you've brought on today has got some fantastic examples as well. But the key point here was that there was really nothing that was revolutionary about it. It really boiled down to basically being disciplined about putting money away every single week and then having time on your side. And so we went through a couple of examples of what that could potentially look like. And so the fictitious example of the person who puts away $100 a week, it's like a snowball that rolls down the mountain, right? And so if we put in $1,000 on day one and you're 20 years old, and then you start putting $100 a month, if you put it in a very conservative fund or allocation, you'd walk away with about $400,000 at the end of 50 years. And the beauty of compounding is you've only put in 61, but time and investments produce the bulk of the return. If you did something a little bit more speculative and you started with $1,000 and put in $100 a week, you could end up with as much as $4.25 million. And so that's just a fictitious example. We looked at what would happen maybe if you put in 200, not 100, and it was even more. I think over time, stocks tend to go up. In the long run, we generally don't know when they're going to go down. We generally don't know how much they're going to go up. I mean, for God's sake, they're making new highs every single day. Who'd have thunk?
Right.
But somebody who's just like on a path where it goes down, you buy, it goes up, you buy some more type of thing, you're going to be just fine in the long run. So those were just some of the general themes of like the benefits of saving, time being on your side, and spending a little bit of time thinking about your financial well-being in the same way that you carve out time for your friends, your family, your health. Carve out a little bit of time for your financial health.
Yes. And that's something to, you said financial health, right? Like that's something to think about, of thinking of it as more of another aspect of your health and well-being, because we know that when we don't have it, that impacts us in a negative way because it adds stress. So
Yeah.
speaking of which, having the ability to like trust an advisor. We don't know. This isn't the language that I speak. I'm a creative at heart. And so many of our entrepreneurs are creative entrepreneurs. We're not saying that you have to rely on your own self to do these things. There are professionals out there. And today we're very fortunate to have a friend and a partner at Catalyst Planning Partners and Wealth Advisors, Rich Wu.
I had two jobs, actually. One, I was in corporate finance, and then two, while I was in corporate finance, I was actually selling real estate on the side. At one point, I decided to quit my corporate finance job just because I felt like really it was just putting numbers in a spreadsheet. I remember having a conversation with a lady in my office. She was like in her 50s. And I said, Leanne, how have you done it all of these years? And she said, Rich, it's been really hard. She painted this picture where she was like making spaghetti for her children at like 7 o'clock at night and get a call from one of her clients. And all of a sudden she's like, hey guys, I have to leave. And that always kind of stuck with me. I knew in the future that I wanted family. I want to have a big family. I wanted to be there for my family. So my parents were immigrants. They moved over here from Korea. When I was in high school, my mom, my dad, and my brother, they went up on a whitewater rafting trip in Wisconsin. And I wasn't there. I didn't want to go because I was busy hanging out with my friends. And, they came back from it and it was just dad and my brother, and my mom had accidentally drowned in an accident. That experience was really formative for me because fast forward 10 years later, and when I was thinking about coming into this career, I said, wow, it's not only an opportunity to make an income and do something that I have aptitude towards, but it was an opportunity to work with individuals and families and look them in the eye and get them from a place of financial instability and insecurity to a place of financial security and a peace of mind. And that's something that we didn't have growing up. Two immigrant parents, they struggle just to make it work. When you lose one parent, it's not just, the mom that you had before. It's also, quite frankly, just some of the financial security that comes with that. The opportunity to work with people and help them in ways that we didn't have help. It was not just appealing. It was like a calling. It was something that I felt like, wow, I could wake up every day and whether I love doing this or not, that I would have meaning and purpose in it. And I think at the end of the day, people aren't just looking to be happy in their jobs or make a lot of money. When you have a certain baseline level of that, you're fine. I think after that, people are looking for meaning in life. When I look back 30 years from now in my life, what do I want to say like I actually invested my time in? I've always felt like I've been doing meaningful work. This is the business for me.
Rich,
Hey,
welcome
Sadia.
to the
Hey, Ron.
Hey, Rich.
Welcome. That your story is impactful. It's moving, but it's your truth. And so thank you for sharing with us. How are you doing today?
I'm doing awesome. I'm dialing in here from sunny Orange County, California.
Nice.
So just trying to stay out of the hot weather and really excited to be here.
Yeah. Well, are you guys in line with the fires at all, or?
Yeah, no, where we're at, we're okay. Everything is okay. And so, but we're obviously thinking about those that are kind of affected now. So.
Yeah. Our hearts go out. I'm from California, so you guys know it. Our hearts are full. So yeah, Rich and Ron, you guys get to talk a little bit about this process. Help people understand.
Yeah, let's do it.
So Rich, I mean, you're an advisor. Ron, I know you had some questions to kind of like probe Rich along the way with regards to what his process is. I think if you guys would like to kind of share your values and what's important, let's let you do that.
Yeah, so like I think kind of where we left things off at the end of the first episode was hopefully it's a call to action and everybody who listened to it felt somewhat empowered and said, you know what, I got this. I could save $100 a week. I can maybe save a couple $100 a month, something like that. And really the open-ended question in between I have my savings and I have a very big nest egg was, what do I do now? Right. And so like I've got these savings. How do I go find a financial advisor? Where do I look? What are even the questions to even start asking? And so Rich, you're one of my favorite people. You're extraordinarily trustworthy and you always have like incredible insights. So like what advice would you give to somebody who doesn't make a lot of money, but is able to put away a little bit? Where would you send them? Like what should they be doing tomorrow?
Yeah, that's a good question, Ron. So what I would say is that initially, if you're looking for some guidance and some help, you're kind of a little bit nervous, you're scared to do it on your own. What I might first do is go to people that I know, that I trust, that I respect, that are similar to me. And I would ask them, I would say, what are you currently doing? Who are you currently using to help you on your financial journey? Chances are that someone in your personal friend group that's similar to you is probably working with an advisor. And if that's the case, I would ask them, I would say, hey, how's your experience been? Are they trustworthy? Are they competent? And I would say that would probably be the kind of your initial first start into looking for someone to kind of guide you in that journey. Now, if you kind of, talk to folks in your network and you can't come up with someone, there's certainly a lot of different avenues, companies like Fidelity or, Vanguard or Wealthfront. There's different platforms that you can use for kind of the beginning investor and the beginning, the beginner to kind of financial planning that you can go to and they can give you guidance. I would say the platforms that are probably best suited for people that are just getting into planning would be ones that actually have someone to guide you through, not just a kind of a website or a portal, but actual live people that can answer questions and kind of guide you along. So yeah, I would say first, probe your network, see if they have some suggestions. Second, if you can't find anything, again, there's just some basic elementary companies and websites that you can go to then maybe find somebody.
Okay. Go ahead, Sadia.
No, maybe it's you, Ron.
Well, maybe I'm the one that's. So let's just suppose I've got 3 financial advisors, right? And they come from my network, and all 3 of them are, people that come recommended. How would you go about saying this one's for me, that one's not for me, and that one might be for me? Like, what would be the questions and the criteria you might use to kind of differentiate?
Yeah, no, that's a great question. I would say evaluate the financial advisor you're going to work with based on 2 main criteria, I should say. One, are they competent? And number 2, are they trustworthy, right? And so number 1, competence. How do you figure that out? I think there's a couple ways that you can do that. Number 1, if someone refers you to that person, you can ask them about their experience and their level of competence. Number 2, you can see if they have some credentials behind their name. If they've got a Series 7 or a CFP designation, things like that can clue you in to see if they have some experience and some knowledge in that area. I think the third thing is if you talk to that advisor and get to know them, you might be able to kind of figure out intuitively, oh, this person kind of knows what they're talking about, or maybe they're kind of fumbling through things and maybe they don't know what they're talking about. So I think competence is kind of the first factor that you want to look at. I think the second thing is, their trustworthiness. Again, I think you can go back to the person that referred you to that person to ask about their experience with them. And then I think also, at a kind of a gut level, as you get to know this person, are they following through on the things that they're going to follow through? Are they saying things that are contradictory to kind of what they're saying originally? So I think you also have to kind of use your gut and your judgment to see if this person is trustworthy. So I think those are the two main criteria that I would look at as I'm kind of evaluating financial advisors.
Any red flags?
Any red flags? Yeah, I mean, I would maybe go and look. I know you can do searches online for advisors, and sometimes you might see various complaints or things that come up if you do a search on someone's name. So I would look there for potential red flags. Another way that you can see red flags is if that advisor is selling you commission-based products without good reason. Again, if there's things like load charges or high transaction costs, there could be reasons why the advisor is suggesting that. So I'm not saying all those things are bad, but if they're not either explaining those things to you, or perhaps they're not giving you other alternatives to those commission-based products, you might want to ask questions, and you might want to be a little bit on the alert.
So I'm curious at the relative importance of the advisor relative to the platform they work for. So think of a really good, very trustworthy person that is generally, let's just say relatively new. They've got a very, very small book of business type of thing. And they can probably call you monthly relative to maybe say somebody who might also be trustworthy, but has a way bigger book on a way bigger platform type of thing. So how would you start to weigh some of those things in terms of size of this person's book, the institution that they work for? I know it's like a bit of a multi-factor kind of approach, but what are some of the other considerations if you were in the market for a financial advisor?
Yeah, good question. I would ask the advisor, how many times can I expect to talk to you on a yearly basis? I mean, generally, most advisors will touch base with clients perhaps 2 to 4 times a year, every 6 months, every quarter. Advisors who are a little bit more hands-on might connect with you more often. If an advisor is saying, look, we don't have a systematic way to get in touch with you, call us if you need us, then you're going to want to really question if that advisor is really just out there to kind of manage your money and not really pay attention to you, or versus someone who's going to be a little bit more proactive in reaching out. The other thing to consider is that they say that on average, an advisor can really only focus on about 100 clients, right? A good advisor can do that. And so, if an advisor is saying, look, I have 400 clients and I don't really have a support staff, then you've got to wonder, is that person going to really be in touch with you? Versus, advisor who says, look, we only have 60 or 70 clients, or maybe we have 150, but we have 3 advisors on our team that can kind of help you. Then, on average, each advisor has maybe 50 people that are responsible for. So I think those are some of the considerations that you want to think through.
So be curious to also kind of get your thoughts in terms of same person goes to see 3 different advisors. Do you think like the end product of what they'd be recommended would look materially different? Or is it just kind of around the edges of like one person puts you in, say, 60% stocks, but it's like in a Vanguard fund, and another person may put you 55% and it's like in an exchange traded fund? Or is there huge variations in terms of what you think a typical person would get recommended?
Yeah, that's the interesting thing about the financial industry. There's so many different types of people that can help you, right? There's financial advisors and financial planners, and there's stockbrokers, and there are hedge fund portfolio managers. I mean, there's so many different people that work in the business of managing money and helping people plan. So I think that's really going to vary depending on what kind of firm you're working with. You might go to someone who, is really just a stockbroker and say, I've got $25,000. What do I need to do? And that broker might say, well, look, we can offer you, some individual stock holdings. So if you want to buy some stocks or a mutual fund, let's do it, right? You might then go to someone who's kind of a more holistic advisor, and they might ask you some questions and say, well, wait, you have some credit card debt. You haven't built up your emergency fund. Well, you're not even maxing out your 401k. So let's take a step back. Maybe we get that credit card debt taken care of, Then let's build up your emergency fund. If there's any money left over, let's put it into your 401k and get that maxed out. And then beyond that, if you have any money, then maybe let's look at some stocks and mutual funds and index funds that you can invest in. So unfortunately, because there are so many different types of advisors and investment people out there, it's going to really depend on the types of people, types of platforms and advisory services that you're dealing with. So it's kind of a hard, kind of long-winded way of saying it just depends.
Well, actually, Rich, let's take a step back. Let's level set, right? Because there could be people that are listening to this that don't know what an exchange traded fund is, a mutual fund. So let's start really basic. What's a stock? What's a bond? And then we can kind of start to unpack of like, okay, I want to take a little bit of risk. What's the difference between, say, a mutual fund and an exchange traded fund and other things? So let's
versus
just
a target fund.
Let's start at 50,000 feet. What are stocks? What are bonds? What kind of flavor of bonds are there? And then let's start to drill down after that.
Yeah, so I can speak briefly, and then Ron, maybe you could fill in some of the gaps. So what I would say is the reason why general investments exist is really because people want to grow their money over time to either offset inflation or just make money on their money, right? The average person is going to get paid and keep their money in a savings account. And unfortunately, a savings account might pay you 0.01 or 0.1%, maybe 0.5% of interest over time, which is not going to allow your money to grow and much less combat the effect of inflation, right, over time. So investments provide an opportunity for you to grow your money, make your money work for you. The two fundamental types of investments are stocks and bonds. All a stock is giving you a small piece of ownership in a company, right? So if a company is worth $100, they issue 100 shares of stock. You own one stock, then you own $1 worth of that company, right? So the company's worth $100, you own 1/100th of that, you own $1 worth of stock, right? Now over time, the value of that company is going to grow. So that $1 share that you own might grow to $1.50 or $2 or $3 over time, right? So that's all a stock is. It's just a small ownership, a piece of a company that you own, the form of a certificate, or obviously if you have an investment account, it's represented there. Now, a bond is generally, not always, but a safer type of investment. What a bond is when you loan a company or a government your money. And what they do in return is they say, look, you lend us $100, we'll give you that $100 back at a certain time, whether you want to redeem that $100 or we give it back to you at a certain time. And in the meantime, we're also going to give you interest. So I buy a $100 bond, right? I loan that $100 to a company or, again, a government. And over time, they say they're going to pay me 3 or 4% interest on an annual basis. So they're going to give me, $3, $4 in interest payments over time. And eventually, whether I want it or that company wants to give me that money back, I'm also going to get that $100 in return. It's a much safer investment than a stock on average, not always. And it's just another way to invest.
Great. And then I think one of the $1 million questions, either as it pertains to stocks and bonds, and probably something which may differentiate some of the advisors, is whether we go out and we buy a big box, lots of stocks in one place, or we say, you know what, I want to buy Google and I want to buy Apple, and I want to buy a select 25 of them, and I could sit and watch each of the 25 of them. Tell us a little bit about active versus passive, and then also talk a little bit about your personal preference.
Yeah, really good question. So, going back to stocks and bonds, investing in individual stocks or individual bonds it's not a bad thing, right? If you know what you're doing, if you have experience, it's great. It's a great way to grow your wealth over time. The issue with investing in individual securities, whether it be stocks or bonds, is that you're taking concentrated risk, right? If I put $1 million in Google and Google does well, great. I'm really excited. Things are going well. If I put $1 million in Google though, and things don't go well, the problem is that I could lose a quarter, half of my money. I could lose all of my money if Google somehow goes bankrupt. So you're exposing yourself to what we call single security concentrated risk. You're putting all your money in one basket, and that can be dangerous, especially if you don't know what you're doing, right? So hence, that's why things like mutual funds or index funds exist. Mutual funds and index funds, all they are collections of stocks and bonds into one basket, so that you're not making an investment in just one company. You might be making investments in hundreds or thousands of different companies. Why is that important? Well, $1 million in Google, going back to that example, if it loses all its value, again, you're bankrupt, the money is all gone, right? But if I had $1 million investment in an index fund or a mutual fund, chances are, if there's 1,000 different stock positions in that fund, even if Google is one of those and it goes bankrupt, guess what? I have 999 other investment positions that are probably not going to go bankrupt at the exact same time. So hence why people use funds. It's just a more diversified, less risky, so to speak, way to grow your money over time. Now, the difference between index funds and mutual funds is primarily the difference between the fact that a mutual fund, someone is managing, there's a mutual fund manager that is managing that basket full of stocks that you own, right? And for that, you're going to pay a fee, right? Whereas an index fund, there's not a manager directly managing that money per se. And so the fee is going to be less, but you're going to hold all of your individual stock positions in equal weightings. So there's no manager saying, hey, we want to hold more of Google than Amazon, right? You're going to hold everything in equal weighting in that index fund versus an active mutual fund. So there's pros and cons to each. Active funds could potentially outperform the market, could also underperform the market, but you're going to pay a fee with it and you're going to get someone managing it. An index fund, you're not going to get anyone directly managing it. You're going to hold all your investments in equal weightings, and it's going to be much cheaper to invest in that way. Again, pros and cons to both, but those are the kind of subtle differences.
So I know Claudia is going to join us in just 1 second, but I do have one final follow-up question before she comes back online. So sure. You had mentioned stocks and you had mentioned bonds. Okay.
Yeah.
But there are other asset classes out there, right? There are currencies. Yep. I suspect some people may even talk to you about cryptocurrencies. There are commodities. And then there are a whole bunch of other private investments. There's real estate and stuff like that. And so I'm curious if you can kind of just talk a little bit about, like, at what point, either in terms of asset size, age, or kind of when do you start to introduce some of these other asset classes into the basics?
Yeah, it's a really good question. So I think it also depends on the philosophy the advisor or the individual holds. The way that we advise our clients, typically in nest egg money that people can't afford to use, we're going to use a variety of different investments. So we're going to, in developing an investment portfolio, so we're going to use U.S. and international stocks. We're going to use, obviously, bonds as a part of that portfolio. We're going to integrate real estate and REITs as a part of that client's portfolio, as well as commodities. When you start getting into more alternative investments, private equity, hedge fund, venture capital, cryptocurrencies, we generally say that's kind of more speculative money that you can afford to lose. So what I would generally tell a client is, for the more traditional asset classes like stocks and bonds and real estate, great way to build kind of your core wealth, money that you can't afford to lose, retirement money for your kids' education. Once you're at the point where all of those things are settled, hey, I have enough for retirement, I'm on track, I have enough for my kids' college, I have enough for my home and my family expenses, and now I can start taking a little bit more risk, and I'm okay with losing some of this money, or I don't necessarily need this money for my core daily living. Then I would say start exploring some of the alternative investments that you had kind of mentioned earlier.
Okay. Sadia, let's pass it back over to you.
So I'm like, whoa, so I'm over here going, yeah, avocado toast versus rent or a mortgage, and the reason why we brought that up, Rich, is, as people are looking at, what do I save? I appreciate that you sort of walked through, you've got all of these responsibilities. Okay. Mm-hmm. Consider all of these things before you then get to that point. And oh, by the way, emergency fund.
Yeah.
What are the basic bottom lines, things that, bottom line, things that we need to think about before we even get to the place of putting some money away, but also just the importance of, wait, there are a couple of things. Yeah, making your money work for you. That's really important. And again, before you can even get to that point, you kind of have to shore up everything else along the way.
Yeah.
And, Ron, thank you so much for asking those really great questions, and Rich, for you really answering them in such a way that I think anybody at any level, whether they barely have anything to save to they've got a lot to save and more to invest, right? Like the goal of this is to be able to show the spectrum, because within the creative industries, you have a spectrum. And you have people making money quick in some cases, and then they just don't know what to do with it, right?
Yeah.
There isn't a legacy of wealth consciousness. So speaking on that, let's actually talk to a real individual who is in the process of looking for a financial advisor. And we're going to role play with Rich Wu and Ann Hagar. Let's welcome Ann Hagar to our talk today. Hi there, Ann.
Hello.
How are you doing?
Good. How are you?
I'm so good. I'm so excited to introduce you to a potential, but for sure, a financial advisor that can kind of speak to some of what your concerns are. In fact, talk to me a little bit about what some of your experience has been in looking for a financial advisor and what's important to you. What are your values? I think one of the things that I have found out in doing this 3-part series, we're now in our second part, is that your values, your health, your sense of consciousness do matter when we're looking at, what we're going to do with that hard-earned money that we all feel very protective about.
Yes, I would say I want to make sure somebody's on the same page that I am.
Yeah.
I'm concerned that they're qualified, that they've got a CFP, that they have results that back it up, and somebody that I have chemistry with, somebody that I would trust. So if I wouldn't trust them to go to Starbucks to get a coffee, I probably shouldn't trust them with my money, right?
Yeah, I mean, that's real. That's absolutely real. But what's so funny, Ann, is you're literally joining the broadcast. You have not heard this conversation yet. That is exactly what one of the advisors had talked about was, the importance of being able to trust that person, making sure that they have the proper qualifications. And so talk to us a little bit more about maybe some of the experiences that you've had, and then we'll introduce you to a real advisor.
Sure. I've interviewed a few financial advisors so far and just haven't found one that I like. One I thought was creepy. So didn't pass the Starbucks test. The second one, I found one I really liked, but then she left the firm. So her replacement didn't have a CFP. He told me he was getting his MBA, and I'm like, well, I've already got my MBA, so I don't know that necessarily qualifies you to manage my money. Because if that was enough, I would be managing it myself. And then the third one, I just wasn't super thrilled with. So I'm continuing my search for a financial planner to help.
Well, this is an opportunity for that to sort of at least speak with someone today that can help our viewers understand what that conversation looks like. I think mostly I've had conversations with creatives who have said, I don't even know where to begin, intimidated by the process. You have an MBA, you're a businesswoman, you know what you're looking for and what your needs are. So that's really going to help you guide yourself in this process.
Right.
But also talk to us a little bit about what's important to you. I mean, you mentioned Starbucks, right? And this talk was like avocado toast or rent, which means basically really rethinking how we spend small dollars and how the small dollars can add up to larger dollars when they're put aside. Talk to us a little bit about your values, and then we'll introduce you to Rich Wu.
Well, I'm not going to totally give up on fun, so I'm still going to go to Starbucks. I don't,
of course,
for a couple times a week. But I look at my budget every month. My goals right now are to figure out how to retire. I'm on the fence about buying a condo, but I would like to have the slush fund. And then my work is up and down, so I always need a 6-month emergency fund. so those are my main goals right now.
Well, great. I'm going to introduce you to Rich Wu.
Hi, Anne. Rich
Hi.
Wu here.
Thank you.
Nice to meet you. Can you hear me?
Yes.
All right. Yeah, great. Well, great pictures in the background, by the way.
Oh, thank you.
Well, yeah, really what I was hoping to do today is just share with you a little bit more about our firm and then spend most of the time just finding out about you and seeing if there's a way that our firm can be a resource for you.
Sure.
So just to give you a little bit of background, I run a firm called Catalyst Planning Partners. And really at the end of the day, we work with individuals and families to help them plan. And the three areas that we focus on are one, wealth management planning. So we help our clients think about their big financial objectives like retiring, buying a house, so on and so forth, and help them come up with investment strategies to get to those goals. Second area of planning is wealth preservation planning. So we talk about things like estate planning, different ways that you can tax shelter your money. And then the third area of planning is risk management planning. So figuring out how to protect your assets through things like life insurance and disability insurance and long-term care planning. So today's more about getting to know you and again, seeing if there's some areas of planning that we can help in.
Perfect.
So I guess just in getting to know you, tell me a little bit about your goals on a professional level. What do you do? What are you passionate about?
Professional level, I'm a growth strategist, so I help companies figure out how to grow. My background is in operations, brand management, and advertising strategy.
Oh, great.
So sometimes I'm going into a turnaround situation to quickly figure out how to get a company back on track. And other times, which can be kind of stressful, and other times is proactively mapping out growth and where the white space is, and then how to organize your culture and company around that white space to capture it.
That's great. Do you foresee yourself doing this kind of work for the next 10, 15 years?
Probably. I like the work. I have my own firm, so the work can be up and down.
Yeah.
So that's why I always need a slush fund. So as I've talked to other people who so I worked in brand management at P&G and then a few other places before going on. So when I talk to other people, I always counsel them, you need a slush fund. So even if you have work, you might be waiting to get paid. You might have a delay work starting. You've got to pay your people working for you. So
that makes sense.
Yeah. So I need a bigger slush fund than some of my peers.
That makes sense. How big is the company? Is this run by just you? Do you have some employees or contractors?
It's me, and then I contract out where I need to.
I see. That makes sense. If money wasn't an issue, what would you do for work? Would you keep doing what you're doing? Would you do something different?
Love what I do. I might do something. It would be more fun to do is add a couple more people. But yeah, I love the work that I do.
Okay, no, that's good. That's good news. Tell me a little bit on the personal side. Do you have family, children, anything of that nature?
I don't have children, but I have a niece and nephews that I adore. So
that's great. Anyone that's financially dependent on you that needs your help now or might need your help in the future?
I mean, if I could help my niece and nephews with college, that would be great. That's a while off. But I don't have dependents right now.
Okay. And then tell me a little bit about outside of work and family, anything else that's important to you that you give your time and energy and resources to, like nonprofits or organizations or?
I am involved in TEDx Chicago, which I think is really fun. And then
wow.
Yeah. I'm on this.
I'm involved with TEDx Chicago.
What? How have we missed each other?
Yeah. Do you know Jessica Lederhausen?
I'm on the speaker advisory committee.
Amazing. Yeah. I think I've seen your name on an email, but that's kind of random.
Well, it's good we're meeting in person now. And so I also have a networking group called SWIM, Savvy Women in Marketing, that I run on the side that is to promote, develop, and inspire executive women. And I spend a lot of time at the Soho House, which has been kind of hard with COVID. But
yeah, okay. That makes sense. Switching gears a little bit, tell me a little bit about financially, philosophically, what does money mean to you? Money means a lot of things to a lot of people that we work with. What does it mean to you? What kind of value does it have for you? Not that it means everything, but what does it mean to you?
I think it means a lot of things. So it's safety and security. It used to be a way to keep score like when I was working in environments where you're getting a bonus, sadly.
Yeah.
But now it's like safety, security. It gives you the ability, a lot of freedom.
Yeah.
So if I didn't have a pad, I wouldn't be able to have the flexibility that I have with work or with COVID or with the other things. So yeah, I like to live underneath my means so that I have more flexibility.
That makes sense. Yeah. Are you generally more of a saver or spender?
I do both. I am kind of a planner. So like I plan for my pad, my retirement, and my other pieces.
Okay.
And then once I have that covered, I'm fine with spending. But I need to know that my
essentials are covered.
Yeah, essentials, and I would count like saving for retirement and the other pieces as an essential, which I know other people don't look at it that way.
Yeah.
And that my future is covered. But yeah, so like when people are like, do you have a Starbucks? I'm like, well, not every day, but sure. Do I go out to eat? Sure. But I don't want to do that at the cost of planning for my future, if that makes sense.
That's smart. Speaking of retirement, we like to call retirement really financial independence because it's the age at which you're working because you want to, not because you need to anymore. What's an age that you might be shooting for to be financially independent?
I don't really see myself ever not working.
Yep.
So that one's always tricky for me. I would love to be financially independent in the next 10 years. I have some friends that are already financially independent right now, which I'm like, fantastic.
Yeah,
so accelerate that. But I don't really see myself like not working and then like, you know what I mean? I think I'll be doing something. So that one is kind of tricky for me, but but financial independence, I would love 10 years.
Okay. So within 10 years, you may still be working, but you want to know, hey, I have enough money in the bank so that if I, for some reason, don't want to work, or maybe work part-time, or maybe work for free, that I have the option to do that at that point.
Yeah.
Okay. Outside of financial independence goals, you had mentioned, well, actually, going back to financial independence, have you ever taken a look at an analysis that gave you an idea of how much money you need saved within the next 10 years, such that you have those options in the future? Have you ever looked at?
So I need to kick it up a notch.
Okay. So you've seen it before. You got to kind of fast track it and make sure that you're on track.
Yeah, and the thing people don't take into account is healthcare costs. So I go in and out of healthcare and pharma. And so it's like you think your costs are going to be here, but depending on how healthcare changes, you need to have a little more pad than you would have thought.
Yeah. For those that are obviously potentially retiring or being financially independent before age 65, and when Medicare kicks in, then you're going to have kind of that gap in healthcare costs.
Yeah.
So that's an important thing to consider. You had mentioned also that you have some nieces and nephews that you want to do something for. Have you looked into maybe 529 plans or things that you could set up for them so that they could have some money for college and various uses in the future?
It's been on my list to check into it, but I haven't checked into it yet.
Okay. Have you looked at any analysis that gives you an idea of how, if I want to pay for a quarter of my niece's, tuition, how much is that going to cost, and how much do I have to start putting away now? Have you looked into any of that, or what your options are?
I have not.
Okay.
But you're giving me food for thought.
Okay. Fair enough. Is charitable giving or giving to nonprofits, is that something important now? Something that might be important a little bit more in the future?
It's probably going to be more important in the future. I've put a lot of my time into charities, but it would probably be more important in the future.
Okay. And have you ever looked into things like donor advised funds where you can make contributions, and deduct them now into the fund and then use them for charitable uses at a later time?
No, but I love that. I didn't even know that was a possibility.
Yeah, there's some interesting things you can do. Again, not everyone's charitably inclined, but if you are, there's very interesting tools that you can use to get the tax deductions now, but not have to use the money now.
Oh, that's really cool.
Yeah. And from a risk management standpoint, thinking about kind of an overall plan for you, I'm assuming you have health insurance currently.
I get my own, yeah.
Okay, great. Do you have anyone financially dependent on you? Like, so if, God forbid, if something were to happen to you, that they would be okay?
I don't have anybody dependent upon me. Right.
Okay. Do you have any life insurance currently?
I believe I do, but I'm not
Okay.
positive I do. It's a really old policy, so I should actually check into that.
Okay. And then the third question I was going to ask is, do you have any disability insurance as a part of kind of your personal planning?
No, I've debated on getting it, and I just
Yeah.
haven't. Each year I mean to investigate it, but I just haven't. But
Yeah.
that,
What,
your point, would be a good thing to check into.
yeah. One other thought. Have you done any personal estate planning? Do you have a will? Do you have a living trust?
No.
Okay. It's something to consider. If you have assets or a house or something that you could potentially pass on, smart to do some of that, planning before, before the future. So, great. Well, maybe what I could share with you, when we talk to clients who are in similar situations as you, ways that we could help are, one, formulating a plan. I think most of the people that we engage or have conversations with have a lot of accounts. I have 401k, I have a mutual fund, I have some savings, I've got stuff all over the place. And so
I realized I couldn't find 2 of my 401k, so I rolled all of that up a year ago.
oh, that's great. And consolidated it into one place.
I literally had to contact one of my 401ks had moved to 2 different companies because I'd left that company 15 years ago. And I was like,
wow,
this is horrifying that I can't, and I was with that company a long time, that I can't. I thought I was calling and they're like, it transferred to another company. And then I called and it transferred to another company. And I'm like, I was like, oh, this is, so I rolled everything up and then I started interviewing financial planners. I just couldn't find that I liked.
Yeah, fair enough. Fair enough. Yeah. So where we help clients in your situation is really kind of first and foremost formulating a plan, taking all the things that they've done and all the different accounts that they have and putting it into one cohesive plan that's helping them accomplish their goals. Now, what are your goals? It sounds to me from our conversation is, one, I'd like to be financially independent within the next 10 years so that I have options to continue to work if I want to or not work if I want to. Number two, putting some money away potentially for your nieces and nephews. There's a variety of ways to do that, 529 plans, general investments, but at least figuring out how much do I want to do? What is that going to put my nieces and nephews on track for? Number three, taking a look at ways to give charitably, either now or in the future, on a tax favorable basis. And then number four, making sure that you're protecting yourself properly. It sounds like you've got a little bit of life insurance and health insurance. Maybe you've got to look into some disability insurance to protect your income during your most important earning years before you retire. And then also, potentially getting a basic will and a trust to avoid, probate, God forbid something happens, and have that money go to the appropriate people. You've worked really hard for it. You don't want that money to go to waste or kind of be lost in the mix of things. And so those are some of the ways that, our firm could potentially help someone in your situation with that sort of planning. But that's kind of, those are some of the things that I was kind of thinking about as we're having a conversation.
Yeah, that's a really helpful perspective.
Yeah. Great.
Well, this has been very great. I mean, what's awesome is that you literally, addressed some of, and you addressed some of the things that Rich had spoken about earlier in his practice as an advisor and what's important to you. So it's really wonderful to see that some of your concerns and some of your values align with his practice. I've got to say, Rich, that one of the things that you brought up earlier is that although I have a financial advisor with the same firm, I don't know that I felt that person was attentive to me. And I like that you mentioned, is it important for that person to speak directly to you, or how many people do they have? Or, if they've got more than X amount of clients, then are they actually able to attend to you directly? And I am one of those people who's like, I don't have a lot of money, so I want to be sure that, I need that like extra reassurance. Yet, keywords yet. I'm working on it, Ron. Ron knows I'm working on it. So thank you for that role play, because the reality is that as I mentioned before, so many individuals are shy of the process.
Mm-hmm.
And Anne shared with me some of what her concerns were, but that in fact, she was really looking for someone. So for our viewers, this is a real experience of a real person looking for a financial advisor, speaking to a real advisor. Whether or not they end up doing business together isn't the point today. It's more for you to see how simple this can be to demystify the process. And, one of the things that Anne and I spoke about briefly is that women in general, and I'm going to go on a limb to say this because I know some executive females who have started companies just to inspire women to talk about money. Women don't usually talk about money. Anne, you want to touch base on that real quick?
Yeah, I went to a concert with 6 of my guy friends from business school. And I told Saudia, fortuitously talking about this today, I'm like, I can't believe how much guys talk about money. They're talking about their investments, their bonuses. And I asked my friend Andrew, I'm like, do you guys always talk like this? He's like, Hager, don't you talk about this with your girlfriends? And I'm like, no. He's like, don't you guys know what each other make? And I'm like, no. And he lost $25,000 on an investment. It didn't feel bad. It was like, I lost. And I was like, oh, I would be embarrassed to tell somebody I'd lost that. He's like, it's not a big deal. He's like, this is just the way it works. But yeah, throughout this, and we went to the same band 2 nights in a row. And I was like, it was really eye-opening to me. I'm like, oh, I need to be a lot more comfortable talking to my girlfriends about it. And so since then, I've like proactively said, I know we don't normally talk about this. And if I make you uncomfortable, I don't mean to. But it was really surprising to me going to this concert 2 nights in a row with my guy friends where they talk about everything.
Yeah.
And I'm like, is this like a special event that you're doing this? He's like, no, we talk about this all the time.
Right.
And their stock tips. And I'm like, I don't know about jumping into cryptocurrency, but like one of them had gotten a 40-to-1 return. And I'm like, oh, maybe I should have jumped into it. But Saudi and I have talked about it. I'm like, I was really surprised by how much men talk about money and how uncomfortable it's been to like start doing those conversations with my friends. Mm-hmm. Like one of my friends is the president of a large agency, and she's like, yeah, I just don't do this. I'm like, let's do it. And let's figure out angel investing. Not today, but like within the next 5 years, we can get ladies more money to start companies.
And there it is. I mean, that's part of what the Center for Creative Entrepreneurship is really, not only providing the resources, but also in some cases, inspiration for new thought and for new emerging organizations. One of the other things I wanted to bring up is, I can't remember, Rich, if you said it or Ron said it, but, having a certain amount of money that that you can lose, right? And when we were talking, or speculative, right? And Anne just brought that up. So I really feel like this has been extremely valuable on so many levels. Ron, how are we doing?
You're doing great. Anne, I've got actually 2 questions for you. So the first question is, I'd be curious about what the experience talking with Rich was like relative to, say, some of the other advisors. What was similar and what was different? So based on the 3 people that you've spoken to now, is it roughly the same or?
No,
okay.
It's very different. So I would say the first guy was just creepy. So like,
hopefully I wasn't creepy.
very low bar. The second one, the other guy, it was more pushing his credentials that he was getting an MBA and most qualified to do it, but he didn't spend a lot of time probing what my needs were. He was trying to get me to transfer my assets that day so he could start doing stuff, and it just made me uncomfortable because I'm like, you're not trying to figure me out or figure out my risk tolerance or figure out what I need. He was just very concerned with getting me to sign something, and So I would put Rich head and shoulders above the other 2 conversations. So
that's great. And then I guess my follow-up question is, since you had that epiphany with your friends and you've started to have conversations with some of your female friends, have you gotten more comfortable talking about money?
I wouldn't say we're comfortable yet. It's really uncomfortable, but I would say we went from really uncomfortable to less uncomfortable. But there's an opportunity. It's definitely not, I mean, we've all known each other. It's a group of guys I went to grad school with, so we've known each other for a long time. So are we, like, I would say they're way over here on being really comfortable talking about money, losses, their bonus, all of it. I would say my friends and I have gone from not talking about it at all to being really uncomfortable to still uncomfortable, but less uncomfortable.
I find that interesting too, because when we talk about wealth inequality or earning equality and making sure that women are paid at the same rate that a man is paid, if we're not talking about it, then nobody knows, right? And that's one of the things, I can't think of Carolyn's last name, but I literally, like, she inspired me and a group of people at a Chicago community trust on the table talks. It literally was around the fact that women need to speak more about money. And it goes back to, like, you know, maybe it was in the 40s and 50s where families just didn't talk about money at the dinner table, and how that translated over time. And so I think, if anything, we're in the midst of so many shifts, right? Our consciousness is waking up in so many ways that maybe now this is a good idea and a good time to start. Everything's uncomfortable right now. It's like, you know, having those uncomfortable conversations and maybe stepping out on a ledge, and then that may inform another and empower and give agency for a woman to speak up and feel confident around knowing, wait a minute, that's what they're making and this is what I'm making. Like,
well, and I would say I went through the Executive Women's Leadership Program at Northwestern, and I'm working on the woman who runs it, but she led the session on negotiating, and she said the biggest problem is women don't ask. And she gave an example of when she got the Executive Women's Leadership Center, she didn't ask for resources that somebody else had asked for when he started a center. And she talked about the gap in just your first job out of business school is a lake house. And she talked about, as you go through mentoring, it's really important for women to get male mentors, because if women don't talk about it and you ask your mentor, she might not talk to you about it. So I would say that's the example of going to the concert with my guy friends from grad school. I had no idea that people talk so freely about it.
And for what it's worth, it's like 95% of the conversations that I've had in the last 20 years. And so let me just kind of double click on that just for a second. I wonder aloud whether the 5 of your friends that were talking about it, literally this is what they live, eat, breathe. They were financially independent. They had really good financial mentorship, and perhaps those that, let's just say, don't have a financial advisor, don't make a lot of money type of thing. So I guess my question is like, were you to have a financial advisor that were to put you into really, really good investments, do you think, and put you on a sustainable path, do you think you'd feel a lot more comfortable talking about it, or this is one of those things you'll never feel comfortable talking about?
Oh, no, I've already gotten way more comfortable talking about it. But like I said, I'm not in the same camp. And if I'm with those guys, now I know, oh, we talk about this.
Yeah.
So if you ask my comfort level in talking with those guys, now I'm like, oh, now that I know we talk about this, sure. We can compare what we're making or bill. But with my female friends, it's still a process.
Yeah. And perhaps you're the catalyst to create that as a new normal.
Yeah, no, because we've already started talking about how could we form our own, not today, but angel investing group to invest in female-owned companies, because we're like, that would be dope. So,
and in that case, one would need to know what's going on with the others. So this is, I mean, you know, this is where we begin. This has been really great. I really appreciate all of you who are extremely busy. Thank you, Rich. And the video was fantastic. Thank you, Ron Wexler. I really appreciate your expertise and your dedication to showing up for us. And Anne, thank you for like really being in the pocket with this opportunity to role play, but at the same time meet some of your interests, that this is something that you were looking into. Yeah. So everybody, listen, thank you so much. Be safe, be kind to one another, and thank you so much for being with us today. Thank you so much for tuning in on this Friday. We say happy Friday to you. I hope that this was informative on so many levels, from the basic level of understanding how your money can begin to work for you, to understanding how to make sure your essentials are covered before anything else, how to shift your mindset around how you spend money, and then also how to then look for an advisor to help you invest your money so that your money can work for you. So as creatives, we are in a position now to take ownership of our financial health and to make better decisions. So I hope, again, that this has been of value. Join us next week as we enter in the third part of this 3-part series. We're going to take it up a notch, and we look forward to seeing you then. Have a great weekend. Take care.